In this class, we'll start with Accounting Standards 22, Accounting for Taxes. Accounting for Taxes. Then we'll move on to the Accounting Standard number 12, Government Grants, how can we handle? So, in this case, you have to understand this one. What is called tax expenses, what is called current tax, what is called deferred tax assets, deferred tax liabilities. If you are able to understand these four aspects, then topic is over. In your balance sheet, already taught you know, as per schedule number 3, company's financial statements you prepare, there, equity and liability, under that non-current liabilities, there you have direct tax liabilities. Similarly, in the case of assets, under the non-current assets, we have direct tax asset. I told you by the time you learn this later on along with the accounting standards, so I am going to teach that here. Only 4 points you are going to study, that's how the chapter is over. What are they? Tax expenses, current tax, DTA and DTL. Apart from that, permanent difference and temporary difference. If you are able to thorough this, the topic is over. Before I solve this illustration, let me finish all those things. In your P&L account, depreciation being 10,000 and your net profit before tax being 20,000. Net profit before tax being 20,000 rupees. You prepare this financial statement, that the income statement as per the financial accounts, means Companies Act, schedule number 3, part 1 and part 2. Okay. Now, what happens for the taxation purpose? You go for incorporated tax provision. Under section 32 of Income Tax Act, provides the depreciation being 15,000. Okay, you understand? Clear? Provides depreciation being 15,000. The asset value being 10,000. Financial account system, 15,000 first year, 10,000 second year, 5,000 in the third year. So, in total depreciation is same 30. Clear? Now, the applicable tax rate being 30%, assume. Now, come on, tell me, what is the net profit for the taxation purpose? Net profit for the taxation purpose. Net profit for tax purpose. Okay, as per Income Tax Act. As per Income Tax Act. Net profit as per Income Tax Act. Is that clear? How much? As the depreciation for the income tax purpose is higher, your profit will be lower by 5,000, right? So you add the depreciation calculated in P&L account, debit it, 20 plus 10, 30 and subtract 15. So 15,000 will be the net profit for the taxation purpose. Now come on, tell me, what about the tax as per financial accounts profit? If you calculate 30% tax on this 20, you have to pay 6,000, am I right? And if you calculate the tax as per the income calculated, applying the income tax provision, it's only 15, means on that 30% is 4,500 you have to pay. So the tax payable as per financial account is 6, as per the taxation purpose it is 4,500. Okay, if the tax payable for the taxation purpose is decreasing, then you are pretty happy. Claiming more depreciation will reduce profit and you are paying lesser tax, you will be happy. That's why investors are motivated to purchase more assets to claim more depreciation. Okay, ultimately there is a savings. Okay, the amount tax payable as per financial account is this is called tax expenses. This is called tax expenses. Hope you'll be now able to understand tax expenses. And the actual tax you pay for the taxation purpose being 4,500, you know, that is called current tax. That is called current tax. Now you'll be able to understand the difference between these two. What is called tax expenses? What is called current tax? Tax expenses means expenses is nothing but the item in P&L account. Current tax, the amount you are paying to the government. Now come on, tell me, are you happy? You are paying less or no? Are you happy or not? How much you saved? Is it really saved? Anyhow, you supposed to pay this later on. In the second year, both are same. There will not be more difference. But the last year, no. In financial account, you debited 10, but income tax purpose allows only 5,000 rupees. Then that year profit will be higher. Unwantedly, you are going to pay more tax on that time. For example, in the second year, okay, in your P&L account, again depreciation being 10,000, your net profit being assumed to be 30,000. This year you made good profit. And now come on, tell me, what about the net profit as per tax purpose? As per tax act? Same 30,000. Same 30,000. Because depreciation under financial account also same. And income tax account also same. Income tax purpose also same. Clear? Clear. Now come on. What about the tax for financial accounts purpose? 9,000. What about the tax for IT purpose? Also 9,000. Okay. Means the tax expenses and current tax both are same. Current tax are being same. Clear? In the third year, assume depreciation being 10,000 and your net profit being 40,000. Net profit being 40,000. Now find out the net profit for the IT purpose. 10,000 debited as per the financial accounts record, but for the taxation purpose you have to debit only 5,000. If you are debiting lesser than the amount actually debited, the profit will be increasing by 5,000 rupees. You should not debit 10, you have to debit only 5,000. Then automatically the profit being 45,000. Clear? Come on, tell me. What about the tax as per financial accounts? Financial accounts being 12,000. Tax as per income tax purpose being 13,500. This will be called what? Tax expenses, and this will be called current tax. Hope you will be now able to understand the difference between current tax and tax expense. Now, the savings in the very first year, anyhow you supposed to pay the third year. The 1,500 rupees you saved, no. You thought you are not going to pay. No, you are going to pay later on the third year. It means the amount payable is postponed to be payable in the later period. Instead of paying today, ask you to pay tomorrow. What is that? Outstanding liability. So you have to pay 6,000 as per your tax calculation, but you are paying only 4,500. Means difference between these two is outstanding liability. But in this case, it's a liability. What liability? Deferred tax liability. Hope you will now able to understand the term deferred tax liability. Deferred tax liability is created. Here we don't have any detail. Deferred tax liability is created means credited. Liability should appear in the liability side, which is credit balance. Here, the difference between these two, 1,500, is reversal of deferred tax liability. By the time it's a liability, now we paid that. So this is going to be debited to the DTL. Come on, guess what is the journal entry for tax? Tax account debit. How much? 6,000. To how much you pay? 4,500 only you pay. 4,500 only you pay. And another 1,500 supposed to payable later until that period is liability named as deferred tax liability, payable after 2 years. So long term, non-current liabilities, 1,500. Here the journal entry being tax account debit 9,000 to bank account 9,000. There is no any deferred tax assets or liabilities. What happens here? Tax payable being okay 12,000. Not only that, actual amount payable to the government being 13,500. What does it mean? That DTL is paid here. Clear? So any tax supposed to be payable not now, postponed to the later, temporarily named as DTL. Temporarily named as DTL, deferred tax liability. In a reverse case, that will be deferred tax asset. In what scenario we may have the deferred tax asset? If the income tax purpose profit is higher than the net profit purpose. So for example, you are clear now? The chapter is going to be completed now, that's all. Suppose here it is being 20, here for the taxation purpose it is 30. Then tax for the financial accounts being 30% on this being 6,000, tax for this purpose being 9,000. So the tax paid being 9,000, but tax expenses tax expenses being 9,000, but you paid 9,000. The difference between these two temporarily kept as deferred tax asset, we may recover later on. When it happens, some expenses are allowed to be debited in the P&L account on payment basis. Section 43B. Are you able to recollect? Interest payable to scheduled bank or financial institution. Not debited, not allowed to be debited if it is not paid within the due date. And bonus payable, interest payable, bonus payable, and any amount contributed for recognized provident fund and all should be paid within the due date. If it is not so, then it is disallowed. In some payment, you need to deduct the TDS. If you have failed to deduct the TDS, you are not eligible for claiming the deductions in this year. But next year, if you pay the TDS, you can claim. So expenses, you debited around 10,000 rupees here related to interest paid. This is outstanding interest. Government says no. This is not qualified to be deductible as it is not paid. So 20,000, with that this 10,000 if you remove, profit will be increased by 10. This is called 30,000 rupees. Next year if you pay, then DTA can be recovered. Okay, DTA can be recovered. That's the logic. Hope you'll be now able to understand DTA and DTL concept. So if you pay lesser than the actual tax calculated for the financial accounts, the actual tax payable is less than the financial accounts profit, and later on you are eligible for adjust this, then this is called DTL up to the period of adjustment. If you are paying the tax more than the financial accounts profit, later on you are able to recover this, then this is called DTA. Clear? Clear? Some cases, what? Expenses are permanently disqualified to be debited. If you are paying anything to non-resident employee without TDS, okay, permanently disqualified. We have studied that under section 40 class A. Isn't it? Permanently disallowed. Or non-statutory fund. I have not debited I have not paid the PF as per the recognized provident fund, but voluntarily contributed. Not allowed to be debited under section 40, the income tax purpose. Okay, you cannot debit. Some expenses you debit, but income tax purpose doesn't allow to debit. Clear? For example, in your P&L account, your net profit being 10,000. This 10,000 after fine and penalty paid due to violation of IT Act. 5,000. Okay, 5,000. Income tax disqualifies this. Section 37 says you can debit only if the violation is due to the mutual business contract. If it is related to the violation of the legal act, you cannot debit. As it is being the legal violation, fine is disallowed. Fine is disallowed. Fine is disallowed. Then how can we calculate now? Net profit for the tax purpose. How much is that? 10,000. If you disallow this number, means this 5,000 should not be debited, means if you exclude, the profit will be 15,000. Without this expenses, the profit should be 15,000. Now what about the tax expenses? Tax expenses related to the financial accounts. How much is that? Assume the tax rate being 30%. 30%. 30% on this being 3,000. Now tax, current tax related to IT Act 4,000, 15,000, 4,500. So the amount as per the tax accounts being 3, but you are paying 4,500, excess payment, usually DTA. Now put the question, is it recoverable later? Can I debit this in the next year? Permanently you are not able to debit this and you cannot claim this. No sir, then it is not DTA. This is not normally expenses, only debit to the penal code. So the difference between IT Act tax as well as this profit, okay, financial accounts profit may be permanent or may be temporary. Okay, maybe the tax difference may be permanent or temporary. Permanent, skip that. In case of temporary, the tax expenses is more than the current tax. The current tax you supposed to pay, maybe 1 lakh. But as per your tax expenses, you have to pay 1,50,000. You are paying lesser. Then it arises DTL. And later on, it can be reversed. If the tax expense is lower than current tax, then this will be called as direct tax, deferred tax asset. Deferred tax asset. Clear? The topic is almost over. Let me summarize the theory. Accounting for taxes, tax shall be accounted on accrual basis. Accrual basis means accounts and not liability to pay. Liability to pay is current tax. Liability to pay is nothing but tax as per income tax. Accrual basis is the financial accounts. You are accounting using this method, but payment is totally different. Payment is as per the tax requirement you have to pay. We have two differences. One is timing difference, another one is permanent difference. In case of timing difference, there is a difference between taxable income and accounting income, and the reversal in future period is possible due to unabsorbed depreciation, some statutory dues deferred for payment basis under section 43B, all these things we learn, no? So because of that reason, there is a difference in payment. Not today, tomorrow you have to pay. Or pay today, tomorrow you don't pay. Such a difference arises means that will be called deferred tax asset or liability. In case taxable income or aggregate accounting income, there's a difference, but this difference is not reversible in future period. Then you should not refer this, you will not care about that. For example, agricultural income, donation and contribution disallowed for the tax purpose. Anything not allowed for the taxation purpose is removed. Due to that, if there is any difference, that difference cannot be recoverable or resettable, so it will be skipped. That's all. Topic is over. Recognition of DTA. How do you recognize the DTA? By applying prudence concept. Whenever DTA means the amount you pay more than the actual amount you're supposed to pay. As per financial accounts, you have to pay 1 lakh, but for the taxation purpose, you paid 1,50,000. That 50 anyhow you can recover later. Then only it will be named as DTA. Can I consider this with DTA? Apply the prudence concept. Means reasonable level, that certainty by realistic estimation and not being the permanent difference. If it is being the permanent difference, it's not DTA. It is not asset because you are not able to recover. This difference anyhow recoverable, guarantees are, then there is DTA. Prudence concept. What is called prudence concept? In case of worst scenario, you have to make the decision conservatively. Worst situation. Okay. In case of DTA, you create. But in case of DTA, worst scenario you may not get. Then it is not your asset. So if you are able to claim it later and there is a possibilities also, estimate also clear, then only this is DTA. But it's a doubtful or permanent, it is not DTA. Measurement. DTA or DTL should not be discounted. It should not be discounted. You should not apply the present value. Sir, this amount is going to be adjusted only 3 years later, sir. Can I use the PV factor to bring it today? No, not required. You have to show absolute value. And reassessment of unrecognized DTA at the end of each year. Every year end, you have to check whether DTL and DTA are really valid one or not. Okay, based on that, you have to show. Disclosure. Under AS number 22, it should be disclosed specifically in P&L account, and you have to give the breakup regarding the DTA and DTL also in your balance sheet separately. Okay, that's it. The topic is over. Let's start with the first question. This one, journal entry already we discussed. Journal entry already discussed. Okay. Entry here I posted in the other way. The way how we posted also acceptable. No problem. Okay. Now come on. Question number 1. Rama Limited has provided the following information. Depreciation as per accounting records 2 lakhs. Depreciation as per income tax record being 5 lakhs. Unamortized preliminary expenses as per the tax record being 30,000. Okay. So in your P&L account, depreciation being 2 lakhs, preliminary expenses being 30,000. But for the tax purpose, depreciation claimable being 5 lakhs, preliminary expenses cannot be debited. Okay. Preliminary expenses, what we do? We amortize over 5 years period. In income tax you learn. In case of preliminary expenses can be amortized over the 5 years. You cannot debit completely in this year. But you debit it completely in your P&L account, but income tax purpose 30,000 are debited. Now, what happens if there is any profit here? The additional depreciation 3 lakhs will increase the profit, and the preliminary expenses you are not allowed to debit. You are not allowed to debit. Then this will reduce the profit by 30,000 rupees. Depreciation, you debit extra for the taxation purpose, your profit will decrease. Okay. This one, the difference between these two, 3 lakhs, profit will decrease. The difference between these two, you debited 30, income tax purpose, it should not be debited. Income tax purpose, it should not be debited. As it is not debited for the income tax purpose, what happens then? If you remove this, profit will increase. So this concept, profit increases. So difference in depreciation, 3 lakhs, profit decreases. Means you are paying lesser tax. You are paying lesser tax than the actual tax by 50%, 1.5 lakhs. Then it is DTL. What about the preliminary expenses? Because of the preliminary expenses, 30,000, profit will increase. On that, the tax being 15,000, 0.15 lakhs. What happens? Your profit increases, means you have to pay higher tax than the actual tax. If you are paying more tax than the requirement, it's an advanced tax. So this will be called as DTA. DTA. Clear? Clear? So this is DTL, this is DTA. Or suppose this may be either DTA or suppose it may be DTL reversal also. Both the things possible. Both the things may be possible. We might have debited completely in the previous year income tax purpose. Debited completely in the previous year. This year they have failed to debit. That may also be possible. Anyhow, you understand DTL as well as DTA. Excess depreciation as per tax records by 3 lakhs. Difference type is timing, it's not permanent, and as the income is lower for the taxation purpose, you are paying lesser tax. Anyhow, you have to pay the lesser tax later on. As you have the commitment to pay later on, this is called DTL. This is called DTL. Okay. Unamortized expenses as per tax records, 30,000 rupees. This is also temporarily timing difference. It increases the profit. As it increases the profit, you have to pay ahead. Okay, you have to pay ahead. Next month you can recover. If you are paying for the next month's tax today, it's an advance, like so deferred tax assets of 15,000. Net deferred tax liability being 1,35,000. This is DTL, this is DTA. Clear? Hope you will be now able to understand. PQR Limited accounting year ends on 31st March. The company made a loss 2 lakhs for the year ended 31st March 2021. So, year ended 2001, 2002 and 2003. You have been asked to integrate 3 years information for the year ending 2002, 2003. So, profit and loss. First year, there's a loss rupees 2 lakhs. Second year, there is a profit of rupees 1 lakh. Third year, there is a profit of rupees 1 lakh 20. It is assumed that the loss of the year can be carried forward for 8 years and tax rate being 40%. Tax rate being 40%. By the end of 31st March 2001, the company feels that there will be sufficient taxable income in future years against which carry forward loss can be set off. There, that the carry forward loss is allowed in the years ending 2002 and 2003 for the tax purposes. Carry forward loss can be adjustable in the later period. Is that okay? Now, what about tax expenses? 40% means 8,000 rupees you have to recover. You have to recover, which is not possible. If there is a gain, you have to pay the tax. In case of loss, will you get the tax refund from the government? So the same happens, but anyhow for the taxation purpose, you expect this 80,000 can be recoverable, like. And for this, 40,000 is payable. For this, 48,000 is payable. This is tax expenses. What about the current tax? Here, current tax is 0. Here for 1 lakh. As for the taxation purpose, we can set off the past year's loss. 2 lakhs is set off here. Still, you have another 1 lakh to be carried forward. No tax is payable. In 2003, already carry forward loss. So, 2 lakhs, carry forward loss. By this end, 2 lakhs. Here, 1 lakh is adjusted. Still, 1 lakh can be carried forward. In 2003, the profit is 1 lakh. Carry forward loss 1 lakh is set off. So, balance 20,000. For the 20,000, 40%, 8,000 rupees will be payable. 8,000 will be payable. Clear? Now, the difference between these two, this 80,000, no. You're supposed to get the money from the government. Okay, isn't it? You have the chance to recover. Then this will be called DTA. DTA. Clear? Next year you have to pay 40, but you don't pay anything. What does it mean? DTA recovered. DTA recovered. How much? 40,000 is recovered now. In the last year, what happens? You have to pay 48, but you are paying only 8,000. The difference between 40 is again recovery of the DTA. Then actual payment in the last year being 8,000. Okay? 8,000. Now, clear? What about the profit after tax? Prepare a statement of profit and loss for the year ending. From the profit and loss, you have to adjust what? DTA and all. Clear. The tax payment is here being 8,000 rupees. 8,000 rupees. 2 lakhs loss, but 80,000 recoverable. Net profit of tax being only 1,20,000. 1 lakh after 40,000 rupees, 60,000 will be your net profit after tax. 1,20,000 minus 48,000, 72,000 is your profit after tax. Profit after tax. The profit after tax is nothing but as per the income tax in financial accounts, the profit is subtracted, means the tax is subtracted. PAT is nothing but profit and loss minus financial account tax, which is called tax expenses. Of course, they have asked you to prepare the P&L statement only. Anyhow, for the better understanding, you can pass a journal entry also. How can you pass a journal entry here? In the very first year, you're supposed to get 80,000 refunded. You have the chance to get it refunded. So the journal entry here being deferred tax asset account debit. Deferred tax asset account debit. To this is the amount recoverable, right? Deferred tax asset. To tax expenses. The value being 80,000. Next year, tax expenses being how much? 40,000 rupees. Tax expenses. How much you are going to pay? Nothing, because it's a reversal of DTA. From the 80, I am recovering 40. In the last year, what about the tax expenses? 48. But how much you are going to pay? 8,000. Difference between these two, 40 is recoverable. DTA recovered. DTA recovered. So from in your P&L account, profit minus tax as per the financial accounts is subtracted to find out profit after tax. Profit after tax. So you have the tax expenses and current tax and DTA arising and DTA utilization and all. Okay, first year tax expenses are reversal because the loss means you are getting it. That's why tax expenses is credited. So 2 lakhs being your loss, you assume this 80,000 being revenue like. Ultimate loss is 1,20,000. That's why the tax expenses seems to be revenue like in the very first year. Logically. Clear? Now, remember one more point. Tax expenses is equivalent to current tax. Okay, current tax plus or minus deferred tax asset and deferred tax liabilities. Deferred tax asset and deferred tax liability. So you have to add up these two. I may write here profit and loss minus current tax right, minus DTL. Okay, minus DTL. 1 second. Sorry. Minus DTL plus DTA. This is the order to find out the profit and loss after tax. Profit after tax. I start with what? Profit before tax. End with the PAT by doing this one. This is nothing but tax expenses. This is nothing but tax expenses. In the very first year, 200 loss. Second year, 100 gain. Third year, 120 gain. You better understand this format. This is how I solved in my Singar Academy material. DTA being 80. DTA being 80. Second year, we don't have these two. In the second year, DTA 40 negative, reversal of DTA. And the last year, current tax 8, DTA reversal being 40. Reversal. So reversal means minus item. So 200, this is plus item, 120. 100 minus 40, minus 40, then it's 60. And 120 minus 8 minus 40, for the tax expenses to be subtracted, which is equivalent to current tax plus DTL minus DTA. Usually profit before tax minus tax expenses, you will get the profit after tax. But instead of tax expenses, in your financial statement you show this way. How? Current tax and DTA and DTL adjustment. That's the process we have to follow. Clear? Yeah. So இப்போ என்ன கேக்குறாங்க, இந்த ப்ராஃபிட் அண்ட் லாஸ்ல டாக்ஸ் எப்படி காமிக்கணும்? கரண்ட் டாக்ஸ் தனியாக காமிக்கணும், டெஃபர்ட் டாக்ஸ் அசெட் ஆர் லைபிலிட்டிஸ் தனியாக காமிக்கணும். டாக்ஸ் எக்ஸ்பென்ஸ் தான் அல்டிமேட்டா டிடெக்ட் ஆகிட்டு நமக்கு ப்ராஃபிட் ஆஃப் டாக்ஸ் கிடைக்கும். அதுதான் நம்ம பார்த்துருக்கோம். கிளியரா? ரிப்போர்ட்டிங் பர்பஸ். கால்குலேஷன் முடிஞ்சிருச்சு, ஹவு இட் இஸ் ரிப்போர்ட்டட் அப்படிங்கிறதே நம்ம பார்த்துருக்கோம். கிளியர்னா டெக்ஸ்ட் பண்ணுங்க. வில் மூவ் ஆன் டு தி நெக்ஸ்ட். ரிலீஸஸ்க்கு அப்புறம் வருதா முன்னாடி வருதா? Okay. Now you are able to understand the question number 2. Clear? கொஞ்சம் விளக்கம் கொடுத்து நான் ஃபினான்ஷியல் ரிப்போர்ட்டுக்கு போயிட்டு வந்ததுனால கொஞ்சம் லேட் ஆயிருக்கு. மற்றபடி இது ஒன்றும் கான்செப்ட் கிடையாது. ஈஸி தானே? கிளியர்? முழுமையாக படிக்கும் போது தான் உங்களுக்கு அந்த டாபிக் பற்றின கிரிப் கிடைக்கும். ஃபுல்லாக அண்டர்ஸ்டாண்ட் பண்ணுங்க. அந்த சாப்டர் கொண்டு வந்து இங்கே லிங்க் பண்ணுறோம், எல்லா சாப்டர் கொண்டு வந்து லிங்க் பண்ணுறோம் பாருங்கள். ஓகே, இதெல்லாம் இல்லாமலே நம்ம படிச்சிட்டோமே சார், அந்த காலத்தில் அது இல்லை. அதான் நான் இப்போ கூட சொல்லுவேன், ஸ்கூல் புக்கை தூக்கி குப்பையில் போட்டுட்டு ஸ்கூல் புக்லேயே இந்த பேட்டர்னை இன்ட்ரடியூஸ் பண்ணோம். ரொம்பலாம் வேண்டாம், முதல் வருஷம் வாத்தியங்களும் படிக்கணும், இல்லைன்னா அவங்க ரொம்ப ஸ்ட்ரைக் பண்ண ஆரம்பிச்சுடுங்க. ஒரு வாத்தியர் பேசிகிட்டு இருக்கிறார், சார் இந்த பார்ட்னர்ஷிப்பில் ரேஷியோ சாப்டர் எதுக்கு வைக்கிறான்னு தெரியல, அது எடுத்துனா சார், ஒரே குழப்பமாக இருக்குது சார், அதை நான் ஸ்டூடெண்ட்ஸ் புரிய வைக்கிறதுல அவனும் குழம்பி நானும் குழம்பி அதை எடுத்துடலான்னு. ஆனால் பாதியில் பார்ட்னர்ஷிப் ஃபேமோடைய வேலையே வந்த ப்ராஃபிட்டை ஷேர் பண்ணி கொடுக்குறது, அதை போய் எடுத்துட சொல்றியே, மண்டைக்கு ஏறலாம் என்ன பண்ணுது. ஒரு நாள் டீச்சர்ஸ் ஓரியன்டேஷன் போனேன். நல்ல வேலை இப்போல்லாம் டீச்சர்ஸ் ஓரியன்டேஷனுக்கு வந்து டீச்சர்ஸ் இல்லாதவங்க, காலேஜ் கவர்மெண்ட் ஸ்கூலில் ஒர்க் பண்ணாதவங்க வரக்கூடாதுன்ட்டாங்க. இந்த இவன் பேசினான்ல, மகாவிஷ்ணு ஒரு பையன் தேவையில்லாமல் ஒருத்தன் பேசினான்ல, அதுக்கப்புறம் பேன் பண்ணிட்டானுங்க. அது பேன் எனக்கு வந்து டேட் சொல்லிட்டாங்க, இந்த டேட்டை வந்து ஸ்கூலில் பேசுங்க அப்படின்ட்டு. என்னுடைய டீச்சர் தான் அவர் வந்து பிஷேபர் காலேஜ் ஸ்கூல் ஹெட் மாஸ்டர் ஆன பிறகு, ஸ்ரீதர் நீங்கள் வாங்க அப்படின்ட்டார். வந்துடுறேன் பின்ன 3வது நாள் அந்த டேட்டு புக் பண்ணது ஒரு வாரத்துக்கு பிறகு 3 நாளில் இந்த காமெடி நடக்குது. இவன் பேசினது மகாவிஷ்ணு கேள்விப்பட்டிருக்கீங்களா? அவன் சும்மா இல்லாமல் அவன் ஏதாவது பேச போவேன். ஓகே, ஆன்மீக பேச்சாளர்னு பேசி அதுக்கப்புறம் அது வந்து என்னாச்சு, பெரிய இஷ்யூ ஆகிட்டு அவனை அரெஸ்ட் பண்ணுங்கன்னு சொல்லிட்டு, இனிமேல் ஜென்ரல் பப்ளிக் யாரும் ஸ்கூலுக்குள்ளார வரக்கூடாது. உடனே அவர் ஃபோன் பண்ணேன், சார் இந்த மாதிரி ஒரு இஷ்யூ வந்திருக்கு, அது நமக்கு இல்லை ஸ்ரீதர், நீ வந்துருங்க அப்படிங்கிறது. அதுக்கப்புறம் டீச்சர்ஸ் அசோசியேஷன் ஒன்று வச்சுருக்கிறானுங்க, அதுக்கு முன்னாடி நாங்கள் தான் பேட்ரன். அதாவது அவங்க என்ன மீட்டிங் நடத்தினாலும் திருச்சிக்கு சிங்கர் அகாடமி தான் வருவானுங்க. இங்கே தான் மீட்டிங் நடக்கும், எல்லா டீச்சர்ஸும் இங்கே தான் வருவாங்க. இன்னும் டீச்சர்ஸ் ஃபோரம்லாம் நல்லா தெரியும். என்ன ரீசன் வந்து நாங்கள் ஆர்கனைஸ் பண்ண ரொம்ப ப்ரோக்ராம் ட்ரைனராக போயிருந்தது. அவருக்கு ஃபோன் பண்ணி என்ன பண்ணுறது சார் கேட்டுங்க, உங்களுக்கு ஒன்றும் பிரச்சனை இல்லை, பிரின்ஸிபலை தூக்கிடுவானுங்க. கடைசி பார்த்தா நைட் அவரே மெசேஜ் போட்டார், ஸ்ரீதர் ப்ரோக்ராம் கேன்சல். நான் கேட்டு பார்த்துட்டு ரொம்ப டென்ஷன் பண்ணுறானுங்க, கேன்சல் பண்ணிக்கலான்னு. அதான் சார் உங்கள்கிட்ட கேட்டேன். சி தட்ஸ் ஹவ். இன்னி வந்து பப்ளிக் வந்து ஸ்கூலுக்குள்ளார எவனுமே அட்ரஸ் பண்ணுறதில்ல. அது என்னென்னா, பப்ளிக்கு வந்து ஒரு விஷயங்கள் தெரிஞ்சிருக்கு, ஸ்கூலில் அது இல்லை. நம்ம இங்கே ஸ்கூலில் எல்லாமே இப்போ நான் காமெடியாக பேசுகிறேன்ல, காலேஜெலாம் ஒரு வேஸ்ட் அப்படின்றதுல. காலேஜ் ஆரம்பித்து நடத்தி பாருங்கள், வேஸ்ட். அது எவ்வளோ பெரிய ஸ்ட்ரக்சர். அது ஸ்ட்ரக்சரை கொஷின் பண்ணுறது வந்து ரொம்ப டஃப். நான் இங்கே ஜோக்காக கொஷின் பண்ணுறது வேறு, ஃபோரமில் போய் நான் கொஷின் பண்ண மாட்டேன். காலேஜில் போய் அதை பேசுவேன்னா பேச மாட்டேன். 2000 5, 6 அந்த பீரியட்லேருந்து பல ஸ்கூல்ஸ் காலேஜஸில் பேசியிருக்கிறேன். இதே தெனாவட்டில் பேசியிருக்கிறேன். ஸ்கூல்லாம் என்னத்தை அப்படின்னு இப்போ தான் கொஞ்சம் கொஞ்சமாக ஏஜ் வரும்போது புரிஞ்சுக்கிறோம். அந்த அமைப்பு உருவாக்குறது எவ்வளோ கஷ்டம். எத்தனை டீச்சர்ஸ் இருக்கிறாங்க, கிட்டத்தட்ட 50,000 1 லட்சம் ஸ்கூல்ன்றானுங்க. எத்தனை ஸ்டூடெண்ட்ஸ் வெளியே வரானுங்க வருஷத்துக்கு யோசிச்சு பாருங்க. 1 லட்சம் டீச்சர்ஸ் கிட்ட இருப்பானுங்க. 1 லட்சம் டீச்சர்ஸையும் பிரில்லியண்ட்டை மாற்ற முடியுமா? 1 லட்சம் ஏதோ ஒரு 5% 10% டீச்சர்ஸ் தான் வருவாங்க. மிச்சவங்கெல்லாம் கிளாஸ் ஏதோ உனக்கு தெரிஞ்சு வச்சு நடத்தி விடு, அவன் பொழைச்சிட்டாங்க எங்கேயாவது போய். அப்போ அந்த ஸ்ட்ரக்சருக்கு அவ்வளோதான் தேவைப்படுது. 100% பர்ஃபெக்ஷன் கேனாட் பி எக்ஸ்பெக்டட். அது தெரிஞ்சுக்க உணர ஆரம்பித்தேன். என்னுடைய கைடு வந்து சொல்லுவார், ஸ்ரீதர் இதெல்லாம் கற்றுக்கணும்னு உனக்கு யார் சொல்லி கொடுத்தா? நானாக தான் கற்றுக்கிட்டேன். இப்போ இவ்வளோ நாள் காலேஜில் போய் நீ கற்றுக்கலையாண்ணா? விஷயம் கற்றுக்கல. ஏன் இது கற்றுக்கணும்னு தோணுச்சு? அவர் இது தெரிஞ்சுக்கிட்ட நல்லா இருக்கும்னு ஒருத்தர் தூண்டி விட்டார். எனக்கு என்ன பண்ணுறதுன்னு தெரியல. மறுநாள் உட்காந்து தேட ஆரம்பிச்சிட்டேன்னு. அந்த வேலையை செய். ஸ்டூடெண்ட்ஸுக்கு நீ வந்து படிக்கிறதுக்கு தேடலை உருவாக்குறதுக்கு தேடி வச்சிரு. நீ போய் ஸ்பூன் ஃபீடிங்லாம் பண்ண அவன் தேட ஆரம்பிச்சிடும். அந்த ஃபயரை கிளப்பி விட்டு அவன் போயிட்டே இருப்பான். சுந்தர் பிச்சை டாப் இன்கம் ஆனர். டாப் இன்கம் ஆனர்னா டாப் கிளாஸ் காலேஜ், அவர் காட்டிலும் பிரில்லியன் காலேஜ் தான் டீச் பண்ண முடியுமா? அவனை டீச் பண்ண டீச்சர்ஸ் காட்டிலும் இவன் பிரில்லியன்ட் தான். ஆனாலும் என்னாச்சு, அவனுக்கு தெரிஞ்சது 1லேருந்து 10. உனக்கு தெரியாது இல்லை? நான் 1லேருந்து 10 நான் ஒரு மக்கு டீச்சர். 10 முறை மனப்பாடம் பண்ணி கற்றுக்கிட்டேன். நீ பிரில்லியன்ட்டு. 1லேருந்து 10 சொன்னோன்னா ஒரே நிமிஷத்தில் 10 கற்றுக்கிட்டேன். கற்றுக்கிட்டது இல்லாமல் 11 எப்படி வருங்கிற கூட நீ சொல்லிவிட்டேன். ஆனாலும் 10 வரைக்கும் நான் தானே சொல்லிக் கொடுத்தேன். அந்த 10 வரைக்கும் சொல்லிக் கொடுக்கறதுக்கு ஒரு மக்கு டீச்சர் போதும். அங்கே போய்ட்டு நீ எல்லாம் மக்கு, நீ எல்லாம் என்ன சொல்கிறேன்னு ஸ்கூலில் அந்த சிஸ்டம் அப்படி நான் கொஸ்டின் பண்ண முடியாது. இட்ஸ் அகெயின் அனதர் பார்ட். அந்தந்த சிஸ்டம் அங்கங்கே இருக்கிறது அப்படியே இருக்கட்டும். நீ உருப்புறது வெளியே பார். அது குறை சொல்றது பதிலாக. தட்ஸ் அ லாஜிக். ஓகே, லெட்ஸ் கோ ஃபார் த நெக்ஸ்ட் கொஸ்டின். கிளியர்? ஆன்லைன் ஸ்டூடெண்ட் சத்யமூர்த்தி, சிவராம், வேறு யார் இருக்கிறீங்க? யார் ஜாயின் பண்ணாலும் ஒரு குட் ஈவினிங் போட்டுருங்கப்பா. நீங்கள் யாருனாலும் தெரியணும் எனக்கு. சிஎம்ஏ ஸ்டூடெண்ட்ஸ் யார் இருக்கிறீங்க? ஆதிஸ்ரீ, ஓகே. So let's summarize this question. In financial accounts, for the 3 years, for the contractor, as they adapted percentage completion method, the profit being 11 lakhs, 16 lakhs and 21 lakhs. This is as per percentage completion method calculated for the financial accounts. And for the taxation purpose, completed contract method is followed. Because of that reason, the profit for the 3 years being this much. Okay. Clear? So this is percentage completion method. Here completed contract method. As per percentage completion method, 11, 16, 21, 48 lakhs is the profit for the contract over 3 years period. Under completion contract method, for the taxation purpose, it is 7, 18 and 23 also be 48 lakhs, but the income may be totally different between these two. If you calculate the tax on this, this is called tax expenses. Okay, this is what about accounting profit. In case of income tax purpose, this is called current tax. On this, if you find out 35%, how much is that value? Come on, tell me. 385. Here, 240. No. I need this value. 385, 560, 735. In case of current tax, on this 35% you have to apply to 245, 630, 805. Now, 385 you have to pay, but you paid lesser. Then what happens? As you pay lesser, you have to pay later on. DTL arises. How much? 140 arises. Next year, 560 only on 560 only you have to pay, but you have to pay 630 for the taxation purpose. As you are paying 70 rupees excess, it is nothing but refunding the liabilities. Okay. DTL reversal. And here again 70 you are paying lesser. higher than reversal. What about the detailed balance you have in your balance sheet? In your balance sheet, first year you have 140, year 2006, year 2007, in that 140, 70 is now paid, so you have 70. In the year 2008, another 70 also paid, you don't have any detail. Is that okay? This is the detailed balance for every year, 140, 70 and becomes 0. Clear? Next question. Next question. I think this you can skip. This you can skip. Let's see. Are you able to manage this one or not? This one is pretty rare. Anyhow, let me explain. No, not required. I can skip this. You don't have the minimum alternative tax. MAT you don't have, right? Okay. You have alternative minimum tax, AMT. This January. Okay. Then let's see. Question number 4. Let's see. Normally tax expenses being 100. As per the regular tax provision, the current tax being 60, where the AMT, alternate minimum tax or minimum alternative tax, AMT is applicable for other than corporates, MAT is applicable for the company. If the AMT is more than the current tax as per the regular provision, you have to pay the higher of this. How much? 70 has to be payable. 70 has to be payable. Now what about the tax expenses, sir? Then what about the current tax? Current tax in this case is equal to tax as per the IT Act plus due to AMT or MAT, if you pay something more, that will also be added. How much you are paying excess due to the application of MAT, AMT 10. That will also be payable. That is also be considered as current tax. Hope you will be now able to understand. That's all. In case of tax expenses, you have to do the adjustment. Tax expenses is nothing but accounting tax you calculated based on the accounting profit. But don't forget to add the excess payment due to the MAT with this. MAT or AMT minus your normal provision. AMT minus your normal IT. You pay the 10 excess, you know that excess is separated, will be addable along with the accounting profit and income tax profit. What you calculate for the tax expenses earlier, with that excess payment due to the MAT will be addable or AMT will be addable. AMT minus current tax, this will be addable. What about the current tax? Current tax is also be inflated due to the AMT additional payment. Okay, that additional payment due to AMT 10 rupees you pay, no, that will also be addable with the tax expenses with the current tax what you have calculated earlier. That's the rest will be the normal. From the following details of A Limited for the year ended, calculate the deferred tax assets and liabilities. Accounting profit 6 lakhs, book profit for minimum alternative tax being 650, profit as per the income tax being 60. Now tax you have to calculate. For the accounting profit, if you calculate the tax 20%, 1,20,000 will be the tax expenses. For the profit, as per the income tax purpose, you have to pay 20%, means 12,000 should be payable. Usually you compare these two only, no? This is tax expenses. This is tax expenses. This will be current tax. Am I right? When the AMT or MAT is introduced, based on the book profit means from the profit calculated as per the AMT provision will be called as book profit. On that, minimum 7.5% will be payable. 7.5% on this being how much? 26,250. Now, what you have to pay? Whichever is higher will be actual tax liability you have to pay, 26,250. What is the excess tax you are paying due to application excess by AMT or MAT? How much excess you are paying? 14,250. 14,250. Now tell me, what about the tax expenses in general 120? Because of the MAT application or AMT application, you have to pay another 14.250 excess, you know, that excess will also be added. Then this value being 134.25. What about the current tax? Current tax being 12,000. But because of this AMT or MAT, you have to pay another 14,250 excess. Then this value being 36.250. And the difference between these two, 108, you pay lesser, then this will be called as DTL. The same you will get here also. You have to add this particular excess payment due to the MAT with the accounting profit, tax and accounting profit, and tax and income tax profit. So this one item is excess, which is nothing but excess payment. If there is no excess payment, forget about that. If there is excess payment due to the application of MAT or AMT over the IT tax, then that will be addable with the tax expenses, addable with the current tax. Suppose this is 100 book profit, and on this tax being 20, on this tax being 30, whichever is higher means this one. So where AMT is not followed, then no tension. Due to the AMT, if you are paying extra amount, that amount will be addable with the tax expenses as well as addable with the current tax. That's it. Now question number 5. One of the comprehensive illustrations. Come on, join with me to solve this. Yes. The following particulars are stated in the balance sheet of Messrs. X Limited as on 31/3/23. Deferred tax liability, deferred tax asset already exist in your balance sheet. Opening balances. So we have what? DTL, DTA. DTA 10 lakhs we have in the beginning. DTL 20 lakhs in the beginning. This is asset, so it is being the debit balance. This is liability, so it is going credit balance. Tax rate being 50%. Second point, depreciation as per the books, depreciation as per the tax purpose. For the tax purpose, the depreciation is lesser. There were no additions to fixed assets during the year. So for the tax purpose, if the depreciation claimed is lesser, then you have to pay higher tax. Okay, higher tax. Means you assume this way, what? They could have claimed higher depreciation for the taxation purpose earlier year. So this may be available in DTL. Now you are reversing the DTL. That's how you can do it. Okay. Now it's a DTL reversal. The difference between these two, 20 for the 20 at the rate of 50%, 10 lakhs. 10 lakhs. This is nothing but what? You are going to pay higher tax. If you are paying higher tax, this will be either DTA or it may be DTL reversal. Then what can we assume, sir? Usually in taxation, no, higher depreciation will be available in the very first year. So, very first year you claim more depreciation, showing lesser tax and paid lesser. This will be available in DTL. Subsequently, it is DTL reversal. That's how we can guess for the depreciation. One of these two possible. The best possibility is for this one only. So, DTL reversal. 10 rupees debit. This is credit, this is debit. This is debit. Okay. Item disallowed in 21-22 and allowed for the tax purpose in the current year 10. What does it mean? last year, probably some item may be debited only on payment basis. As in 21-22, this 10 lakh remains not paid, income tax purpose disqualified. Disqualified means you paid the tax in that year. You paid more tax in that year. If you pay more tax, that is called DTA. It is called DTA. This DTA includes this amount. This year, income tax department allows you to debit on payment basis. This year you can debit. For the taxation purpose, you debited this 10. For the income tax for the income tax purpose, it is debited. For the normal financial account, you are already debited in the previous year, not allowed to be debited in this year. So, as income tax purpose, you are debiting, the value will be higher with respect to the expenses, profit will be lower, and tax on this being saved. How much is that? 10 into 50%, 5 lakhs is the savings. This is nothing but reversal of DTA. Reversal of DTA. Reversal of DTA. Is that okay? How much is that? 5 crores credit. 5 crores credit. Imagine if you have any doubt, you can imagine this way. P&L account. In the last year, we have debited 10, 20 rupees will be the profit. For the tax purpose, profit being, as you are disqualified this one, profit being 30. So you pay the tax on this 15, but your tax expenses being on this 10, you paid 5 excess, that is called DTA. In this current year, in your P&L account, you calculate the PAT being 30, but income tax purpose says no, this 10 you paid this year, no, I allow this 10 to be debited. So for the income tax purpose, the PAT being only 20. So you have to pay the tax on this 10, but your tax expenses being 50% on this being 15. You have to pay 15, but you, as per the tax, pay only 10. What about the 5? Already paid in the last year, no, it's now used. DTA is reversed. Okay, this is the most advanced sum. I think it was asked at the final level most of the time, carrying around 10 to 12 marks. Okay, one of the advanced illustration. Interest to financial institution to accounted in books on accrual basis, but actual payment was made before the due date of filing. What is this? Okay, interest to financial institution is accounted in books on accrual basis. Is accounted in accrual basis. Okay, accrual basis means though it may be outstanding, it can be debited to the P&L account. What about the taxation purpose? Can it be debited or not? Can it be deducted, debited and deducted? Can be debited and deducted based on what? Payment basis. As per the payment basis, when to pay? Pay before the due date of filing of return. What happens here? The payment is done before the due date of filing of return. So for the financial accounts, debited. For income tax purpose, debited. Is there any change in the price of profit? No change. If there is no any change in income or tax between the financial accounts and income tax, there will not be DTA or DTL. So we don't have DTA or DTL. Not applicable. Is that clear? So this particular content is linked with the direct taxation chapter directly. Donation to private trust. Donations to private trust. Donation under section 80G can be allowed only in specific cases. Okay, 80G. So we have seen 100% allowed, 50% only allowed, specific 50% or 100% to sealing is allowed, like all these things we have seen. But private trust completely not allowed. As this donation you might have debited in your P&L account, donation 10, after that your profit being 20. But income tax purpose, you know, this is disallowed. Profit for taxation being 30. Okay, so tax expenses being 10 and tax for the taxation, current tax being 15. Can I get the 5 rupees back later on? No. Why? This is a permanent difference. We don't have the chance to recover it later. This is permanent difference. Never bother about that. Now, next one. share issue expenses allowed under 35D. You always remember this way in your P&L account as well as tax purpose. Imagine this way so that you can comfortably solve. Share issue expenses allowed under 35D for the year being 1/5 of 25 lakhs. Okay, incurred in 2021. Previous year. Actually, 25 lakhs incurred in which year? 22, 2021. 2021. 2021. Incurred in 2021, but the amount spent being 25 lakhs, you know, that entire 25 lakhs debited in financial accounts in that same year, but in case of tax purpose, it can be amortized over 5 years period. 24, 25, isn't it? So 5, 5, 5, 5, 5. For the income tax purpose, it can be amortized over the 5 years period. Preliminary expenses under section 35. Amortized, this is the income tax purpose. So, in income tax purpose, you debited only 5 means 20 rupees profit will be higher in the very first year. Higher profit leads to higher payment, but later on recoverable. So, DTA is created here. Every year, you are going to reverse this to that extent of 5. So, 5 on that 50%, 2.5 can be reversed in DTA. 2.5 credited. Already we created. So, now I am reversing this. This is the debit value in the very first year. 25. On that 12.5 will be the DTA. And every year after, you are reversing that. Okay, you are not debiting in your P&L account because completely debited, but for the taxation purpose, you are debiting every year 5 means every year your profit for the taxation purpose is lower. You have to pay lesser tax. Lesser tax means it's a detail supposed to be payable later, but it is not supposed to be payable later on, already paid earlier. So, it's a reversal of DTA. Now, repairs to plant and machinery 100 lakhs was spread over the period 22-23 and 23-24 equally in the books. However, the entire expenditure was allowed in income tax purpose. Similarly, repairs 22-23, 23-24 for financial accounts for income tax. The amount spent being 100 lakhs was spread over 22-23 equally in the books. In financial accounts, 50-50. That's how we debited year on year. But for the taxation purpose, the entire 100 is debited in this current year itself. So, you debit 100 lakhs in your P&L account for the taxation purpose, which is 550 lakhs excess means profit will be lesser. As profit is lesser, what happens? You pay lesser tax this year, next year anyhow you have to pay more tax for this difference, 50 lakhs. So, 25 lakhs. This is creation of DTL fresh. Next year what happens? You can reverse this. So, DTL created fresh here, credit. Now, what is the closing balance of DTA and DTL? 10 we started with, 5 and 2.5 reverse. So, 2.5 debit still we have in our balance sheet. And in DTL, 20 credit, 10 is reversed 10 and 25 again created. So, 35 credit we have in DTL account by the year end. Okay. Now, we'll see accounting standards for government grants. Accounting standards for government grants. Okay. When you purchase the asset, government may give grants, right? What will you do in case of grants for the assets? You have studied under section 43 again income tax. What are the grants? It will be subtracted from the assets value. So, you purchased the assets for 1 lakh and government gave the grants 40,000 rupees. Now the value is 60. Hereafter you will be depreciating on that 60 only. Very simple. Or here it's a comprehensive. Or keep the 100 as it is and that 40 as it is. Depreciate that 100 over the life and debit to P&L account. Amortize the government grants 40 over the same life, credit in the P&L account. Both the way. 2 items are over. Third, if the asset you purchase for 1 lakh, grant is given 1 lakh. Means free of cost or free of cost. Asset is given at free of cost. Now, how can you record? 100 minus 100, 0, sir. No record. No record means what happens? The next day, this will be in the owner's house. So you have to give a nominal value for the assets and show in your books. At least say 100 rupees or 1000 rupees. You purchase a plant and machinery 10 lakhs where the grants is completely given by the government. The value is 0. But anyhow, plant and machinery account debit to grants 100. By showing, it will be appearing in your balance sheet when auditor comes. What's this 100? Oh, is it government grants? Can I see that property? Where is it? And it's my responsibility to show him where is the asset, and it will not be going to be in the house of the owner. Okay, so free of cost. Another one is given, can be adjusted in the cost of the asset or can be shown separate. Next, if the asset being non-depreciable asset related to the land and building, in case of depreciable asset you can depreciate. In case of non-depreciable asset, again it can be subtracted from the assets value. Now, again government grants. So, what are the government grants we have seen? One is full, another one is partial for depreciable assets, non-depreciable assets. In this case, you can subtract from cost. Another one is cost is separate, subsidy is also separate, government grants separate. Is that okay? These are the two cases. The another case, what happens to the subsidy, sir? Condition attached, non-conditional. If you fail the condition, you have to refund. No condition, so not required to refund. Then there may be chances of non-fulfillment of condition and supposed to refund. How can you handle in the case of refund? This one part. If you are able to understand all these aspects, the government grants chapter is over. Clear? Very simple. If you get full value as consideration or free of cost, if you are getting the property from the government, you have to show at a nominal value, say 100 or 1000. If you are getting for any depreciable assets, you can subtract from the cost and remaining value can be depreciated, or keep the asset value as it is and subsidy value as it is. Depreciation will be debited and subsidy amortization is credited. In case if it is refundable, reverse this. So the asset value being 100, subsidy 40, now you show this being 60. You depreciated 12 rupees, now it is 48. Sometimes later you have to refund. Around 20 rupees supposed to be refundable because of non-fulfillment. Again add this back, that's all. Thereafter the asset will be depreciated based on 68, not 48. I have given the briefing about all the six. Let me solve the illustration with all the provisions so that you will be able to understand these government grants comfortably. Okay, government grants comfortably. Applicable, it may be subsidy or cash incentive or duty drawback. These kinds of subsidies may be given. Maybe cash or kind. Kind means free asset. Asset given at free of cost. When can I recognize this as my revenue, sir? Reasonable asset assurance and receipt of this certainty of collectability. We have seen that in AS number 9. No, whenever anything supposed to be receivable, there should be guarantee of receivable. So reasonable assurance and receipt and fulfillment of condition. If there is any conditions to fulfill, you have the power to fulfill the condition. Only then it will be recognized. If condition seems to be non-fulfilled at all, then what is the purpose? You have to refund. You should not consider this being your subsidy. And for what this will not be applicable? For assistance, not applicable. In case of government participation, this will not be applicable. Government assistance means government will come and give the guidance at free of cost. The guidance, the assistance, worth rupees 5 lakhs, given by the government at free of cost. Don't say assistant received 1 lakh worth but subsidy received. No, that will not be applicable. Only in case of monetary or some assets should be there. Government participation means you start with the 10 crore rupees. Out of that, 5 crores is government's capital. Keep the government is also one of the partner, and government contributes for the capital like PSU. Like that will not be subsidies. It's they are being the owner. That money is refundable to the government. So in these two cases, this government grants is not applicable. Now, how can you account this? We have the two approaches of accounting. One is capital approach, another one is income approach. Capital approach means It's a part of shareholders' funds and treat this as a capital reserve. Okay, capital approach means it's not considered as a revenue to be transferred to the P&L account. And grant approach means grant is treated as income. Over the period, it can be transferred to the P&L account. This will be transferred to the P&L account. It remains as a capital reserve in your balance sheet. This remains as a capital reserve in your balance sheet. So, in your balance sheet, the subsidy appears as a capital reserve. In your P&L account, subsidy appears as a revenue. This will be revenue approach. This will be capital approach. Scope of government grants. Okay, non-monetary. If you get asset at free of cost. Free of cost, though it is free of cost, you have to show the asset's value at nominal value. When you purchase the asset, you paid around 10,000 rupees. The worth may be 5 lakhs, but you paid 50,000 or 1 lakh. The actual amount you paid will be your value you have to show in your books. In case of solar panel, if you want to install in your premises, government gives 30% subsidy. So it means you have to pay only 70%. The value may be 10 lakhs, but you are paying only 7 lakhs. So you have to show the books, means value of the asset in your books at 7 lakhs only. That's what about the first scenario. Non-monetary, you don't get the cash. You will get the material free of cost or you will get the material at discounted price. If you get the material at free of cost, you have to show some value. If it is a discounted value, the value what you pay will be value recorded in your book. So in case of LPG earlier, no, government gives subsidy. For every cylinder 1,100, you usually pay 700 rupees. Government gives a subsidy directly to the LPG company. Okay, so you consider the 700 being the cost you pay. Nowadays, what happens sometimes later? You pay 1,100 rupees and you get 400 rupees back from the government. It's a cash assistance. You pay 1,100, you get 400 rupees in cash. That's another method. So both the methods are there. The first case, you pay net of the government subsidy, then you will be considering the value being only net of that. And if you are getting the subsidy related to fixed asset, then asset could be depreciable. Depreciable assets, non-depreciable assets. In case of depreciable assets, we have two methods. What happens on the first method? You can subtract the grant from your book value. What is the second method? It may be shown separately as deferred government grants in the liabilities. So, in the first method, P&L account as well as balance sheet, cost of the asset being 100, government grants being 40, 60, and the life being 5 years means depreciation being 12. You have to amortize over the 5 years period under straight line method. So 12 is debited to the P&L account. This is one approach. In case of another approach, the cost of the second asset purchased being 200, government grants we received for this asset being 120 shown in the other side. This is government grants. And life being 5 years. So you have to claim the depreciation for 5 years, 40 rupees per year. Similarly, this should also be amortized over the 5 years period. What's the value? 24. So then this value being 96, this value being 160. This 40 will be debited and this, is it 24 correct? 24 will be here. So government grants amortized and depreciation charged. Okay, the first method is a net of, next method will be depreciation on the whole asset and government grants amortization will be in the credit side. So, credit to deferred government grants. Recovered income as equal as the depreciation. Okay. Like depreciation, you will recover in P&L account. That's a second approach. Method 1, method 2. And sometimes there may be condition attached. If you fail to fulfill the condition, you have to refund. You got 40 rupees government grants. Sometimes later, you fail to fulfill the condition. Government recovered 30 rupees from you. In this case, in that year, you have to add the 30 with this. Here, you are going to adjust this here. If 30 rupees is going to be refundable, 30 is subtracted, only 66 you have here. Any amount refundable is added with the book value of the asset under first method. Under second method, this deferred government grants you have in the liabilities, no, that is going to be reversed. Deferred government grants and to bank. Okay. Any balance is transferable to the P&L. Any balance you have, it can be transferable to the P&L. You understand the two methods. Method 1, net of the asset. Method 2, keep it as it is, related to the depreciable assets. Now, what happens, sir? If the subsidy is related to revenue, in case of revenue, it can be credited to the P&L account directly, no problem. Supposed to be refundable, debit to P&L account, that's all. Okay, government announced you not to fix the price more than a stated price. For example, all the petroleum company. Okay, earlier it's controlled by this government. Government says you should not fix the petrol price more than 100 rupees. And the petroleum company demands, sir, it's not possible, sir. Cost of manufacturing, producing the petrol cost is 105. How can you ask me to sell for 100 rupees? I'm losing 5 rupees, sir. The government says, no botheration. I'll give 5 rupees subsidy because public agitation should not be there. So I am now purchasing at 100, purchasing at 105, selling at 100. I'm losing 5 rupees. No. Now I am getting the subsidy from the government. That subsidy can be credited in your P&L account simply. Clear? Sometimes later, if you refund, then it can be debited to the P&L account. That's all. Now, what happens, sir? In case of promoters' contribution, like it is a capital reserve. It cannot be considered as income approach. Maybe capital approach. And on refund, capital reserve is refundable. Refund of government grant is due to non-fulfillment of condition is an extraordinary item as per AS number 5. We have seen, no? Extraordinary item, exceptional item and extraordinary item. Under extraordinary item, we had earthquake like natural calamity losses and government attachment of your property and government grants supposed to be refundable. These three will be extraordinary item. There we have referred only 2 items. So this will also be considered as extraordinary item. While preparing your profit and loss statement, you have to show this refund separately. Clear? That's all. Now what about the disclosure? The accounting policy adapted for the government grants should be disclosed, whether it's a revenue method or net method or capital approach, whatever it may be, including the presentation. Okay. Now, the nature and extent of government grants recognized in the financial statement. How much you recognize? Though government grant you received being 40, but you credit in your P&L account only 18 this year. You have to state the reason, including non-monetary assets given at concession rate. Everything you have to disclose in your below the balance sheet items. Okay, in the notes to accounts like. Now we'll start with the practical problems. Practical problems related to the revenue, non-monetary grants. Shiva Limited has received a grant of 15 crores. 15 crores. Okay. Okay. Then government for setting up manufacturing unit at a backward area. This grant is for what? To set up the manufacturing unit in the backward area. Out of this grant, the company distributed 2 crores as dividend. Also, Shiva Limited received land free of cost from the state government. This is 1, this is 2. It has not recorded it at all in the books as no money has been spent. So they have not recorded. In the light of AS 12, they examine whether the treatment of both the grant is correct. Second one is wrong. Should not be left unrecorded. You have to record at nominal value, say 100 or 1000. Otherwise, it may be misused. There should be at least document related to that. Only the registration document, if you have, it is not being the accounting record, not shown in the accounts, and auditor missing it out. Later on, the property may be in the name of the owner, not in the owner name, business name. So it is wrong. In the first case, this is for contribution for the capital. For starting only manufacturing unit, it should be kept as capital reserve. Capital reserve cannot be used for dividend distribution. Already you have seen, no? In what profit we can use for dividend distribution? Normal dividend divisible income only can be used. So it is non-divisible income, so it cannot be used. So this is also wrong, this is also wrong. Now, next one. Monetary grants related to the non-depreciable assets. If you are receiving, it can be adjusted in the assets account. Very simple. Another one is it may be kept in the capital reserve account. During the year 2013 and 14, Purvi Limited received a grant from Government of India amounting to rupees 35 lakhs towards purchase of piece of land 140 lakhs. This is the land value. This is the grants they received. So for the purchase of the land, what is the journal entry? Land account debit to bank. And while receiving the grant, it can be adjusted in the land account. So bank account debit to land account. This is one approach. In another approach, land account debit to bank, the grant you received, bank account but named as capital reserve. So both the methods are followed. Method 1 and method 2. Clear? So next illustration is all about monetary grants related to the depreciable assets. Depreciable asset. Okay. In case of depreciable assets, Jaya Krishna Mills runs a modern wheat flour mill. CFO had prepared the draft accounts duly considering the mandatory accounting standards. Following note appears: the company purchased on this date special purpose machinery 75 lakhs. It received state government subsidies 10% of the price 7.5. This is cost of the asset. This is government subsidy. What is the proper method? The life being 10 years. 10 years. Now on purchase, the journal entry being 75 lakhs. Bank account debit, machinery account debit to bank. Is that okay? Clear? See, machinery account debit to bank account. On receipt of the government grants, it can be adjusted in the cost itself. So bank account debit to machinery. Then the value being 67.5, you can amortize over 10 years period. Every year you have to depreciate 6.75. Depreciation account debit to P&L account, means asset account 6.75. Method 1. In method 2, you keep it separately and for that 7.5 lakh will be the depreciation debited to the P&L account. For this 0.75 credited in P&L account. This is debited, this is credited. So the journal entry for this being machinery account debit to bank. For this, bank account debit to deferred government grants. And year on year, this depreciation is debited to the P&L account. Depreciation account debit to asset 7.5. This 0.75 is credited to the P&L account named as deferred government grants to P&L account. Clear? Next. What happens in case refund due to non-fulfillment of condition? This is an extraordinary item. In case of refund, just reverse it. So while receiving, bank to machinery, while refunding, machinery to bank. Thereafter, you can depreciate based on the revised value. So 1 year later, 75, government grants you received 7.5, 67.5 is the book value. You claim the depreciation very first year, 6.75, isn't it? What is the closing value now? 60.75. I think this is the correct value. This is the WD value for the first year end. Now, if you are supposed to refund this, you have to add that 7.5 with this. So, the value being 68.25, remaining life being 9 years. Remaining life being 9 years. So, you have to depreciate over the remaining 9 years. What's the value? Clear? In this case, the depreciation remains the same. In this case. Okay. So, deferred government grants actually is 7.5. We claimed crediting 0.75 in P&L account already. Now we have 6.75. Refund should be how much? 7.5 is refundable. So then government grants account debit 6.75 only we have, but amount payable for refund being 7.5. What about the 0.75? This is nothing but already credited. Now is supposed to be refundable, is going to be debited to the P&L account. Clear? In these two approaches. What happens in case of refund? What happens in case of receipts? That's all. Okay. Rather than refunding full value 7.5, the next illustration, a variation is there. A portion is refunded. A portion is refunded. You can guess it yourself, so I may leave it for your solution, for your working. If only 4 lakhs is refunded, what happens? Only to that extent you can adjust. Only to that extent you can adjust. Is it complete refund or partial refund? Sir, I fulfill few conditions, sir. Give me some concession. Okay. Rather than 7.5 lakhs refunding, you just refund 4 lakhs. Now let's go for the promoter's contribution. Promoter's contribution will be always considered as capital reserve or part of the capital account. Okay. No more information required here. Okay, that's all. No need to worry about this. Top Limited has set up its business in designated backward area. We have already studied the similar illustration. Designated area where the company paid some money. So here what happens, the subsidy being 20% of the cost of the investment, having fulfilled all the conditions under the scheme, the company on its investment 50 crores on capital asset received 10 crores. They are investing 50 crores in their business and they got 10 crores from the government in January. The company wants to treat this receipt of an item of revenue for the distribution of dividend. Is it possible? No. The capital contribution should always be capital reserve. It cannot be treated as revenue profit transferable for, means payable for the dividend, cannot be used. A is number 19, leases. In this period, in this class, I will cover predominantly some theory and operating lease. Next lecture, I will cover the financial lease with an illustration. Right. A is number 19, leases. Okay. A allows his asset to use by B for a consideration. This is called lease rate. Okay. And this lease is not applicable for lease agreement to explore natural resources. You enter into the lease agreement to explore the natural resources like oil, gas, timber, metals and minerals rights. This A is not applicable. Licensing agreement for films, video recording, plays, patent, copyright, this is not applicable. Only the asset like means leasing will be applicable. Leasing agreement to use the land also be not applicable. Now, we have two types of leases. One is finance lease, another one is operating lease. Finance lease. You have to understand what is the difference between finance lease and operating lease. Very often, the difference may be asked in your examination. So, you have to be careful here. For example, A being the lender, B being the businessman needs fund. B approaches A for lending amount for purchasing a plant and machinery. Immediately lender demands what is the security. B says, I don't have security, sir. I need to borrow and do business with the borrowing and I will generate money. Without security, how can I give? Sir, if I have this plant and machinery, I can generate around 1 lakh rupees per month, sir. Your interest component is only 30,000 rupees. Even after paying, I get surplus of 70. Okay, believe me and give me, I'll pay even 5,000 more. Well, in business, there is no belief. Give me the security. Then what happens here? Sir, you purchase the plant and machinery in your own name. Now A purchases the plant and machinery. Now the question is it required for the lender? No. Why he purchases? The purchasing the plant and machinery only for his client's requirement. And A gives the plant and machinery to B for use. And now B pays what? Lease rent. You told me to pay 35, no? Pay me 35,000 rupees. Pay me 35, whatever it may be. He demands this amount. So this amount preferably similar to higher purchase value. 1 lakh he purchased and he demands that I will pay in 4 years. He adds 4 years interest 50,000 like 1.5 lakhs and demands this 1 lakh 50,000 will be payable over the 3 years period like year on year 50,000 rupees. Okay. Now see, after 1 month usage, B says, sir, I want to cancel the lease. What happens here? A big shock to A. A says, I purchased only for your requirement. If you say no, then I don't want to use this plant and machinery anywhere. I am not interested to use this. So from this it is very clear what? This lease is non-cancelable. Non-cancelable. And if the life of the asset being 5 years, the lease tenure may be 3 or 4 years. Majority period will be primary lease period. And sir, this asset is purchased only for me. No. After the final settlement, kindly return this to me. So now it is transferred to B for a nominal amount, 1 lakh. After 5 years, you paid lease rent for 5 years genuinely, and lender is also happy. Today, this asset can be sold in the secondary market or scrap as 20 and demands B, sir, I will take. Okay, take, give me only 5,000 rupees. A nominal value at which it is transferred to B. These are the nature of finance lease. So here the leasing is not leasing of the assets, it's financing indirectly in the form of leasing. Indirectly in the form of leasing. Then what happens in case of operating lease, sir? A, who is doing renting of plant and machinery business. B wants this property or plant and machinery for use for 3 months only. For that, lease rent is payable month on month. Month on month. Now, A is involving in renting of the same business. For example, he has 10 cars used for rental purpose. A demands to take the car rental for 3 months. So, A is now already having the car, not purchased for the B, and B is also taking this for a temporary period of usage. And even in 1 month later also he wants to cancel, then he can cancel. Then this is called getting the plant and machinery only for his operating purpose temporarily. Then it is called operating lease. Hope you will be able to understand the difference between finance lease and operating lease. Finance lease and operating lease. Clear? Now, non-cancelable lease. How can you decide whether it is a non-cancelable lease? If the lease being non-cancelable, automatically it is coming under finance lease only. How can you decide it is being the non-cancelable? Okay. Upon the occurrence of some remote contingencies only, it is cancelable. Usually non-cancelable, but any extraordinary situation happens, then it can cancel. Then it is actually non-cancelable only. Or cancelable only with the permission of the lessor. I enter into the contract for 4 years. Okay, around 2 or 3 years later, sir, I cannot manage. I can give a compensation also as you purchase only for me. Kindly accept and bear my problem and cancel the lease. If the lessor accepts and cancels with a penalty, also be considered as non-cancelable lease. It's not operating lease, it's a finance lease. If the lessee enters into a new lease, existing asset he doesn't want, so he cancels and demands to enter into a lease with a new plant and machinery with the same lessor, also be non-cancelable. Upon payment of lessee of an additional amount for cancellation, also be considered as non-cancelable lease. These are non-cancelable lease. If the lease seems to be non-cancelable, then from this it is very clear it is a finance lease. If it is easily cancelable, then it is operating lease. Clear? In case of non-cancelable, the lease term will be very high in the very beginning. Okay, if the asset being 10 years, the initial lease period may be 6 to 7. Effective life of the asset may be in lease period only. This calculation is for finance lease. We'll see in the next illustration, next lecture. This is all about finance lease. Finance lease. I'll directly jump to operating lease. Finance lease component I will discuss in the next class. I will go for the second type of lease, operating lease. Okay. In case of operating lease, it does not transfer substantially all the risk and reward of incidental ownership. Ownership is not transferred because A being the car owner, he has a 10 pool of cars, letting 1 or 2 cars now and then to various lessee. Then ownership is not transferred, even at the last. Then it is called operating lease. Operating lease. In the books of lessor, This is an asset appearing in the balance sheet. And lease rent will be your income. So, A being the car owner, to B, his car purchased at 10 lakhs, given in lease, okay, lease, okay. For that lease rent, month on month he pays 25,000. And this will be the asset, this 25,000 being the income, and as A being the owner, he can claim the depreciation on this asset also. Who is eligible for claiming the depreciation? A only. What about the B scenario? The lease rent what he pays is no, this is nothing but expenses debited to the P&L account. Can he claim the depreciation? No, he cannot claim. The depreciation is claimable only in the books of lessor. Okay, an asset of the balance sheet. Lease rent is being the income, and depreciation as per A is number 10, property, plant, equipment. And impairment loss also be applicable. A is number 28 as well as A is 10, both will be applicable only for A. In case of B, lease rent is the expenses debited to the P&L account, usually straight line basis over the lease term. That's all. Very simple. So this is the asset for A. This is the asset for A. So as you are being the owner for the asset, you can claim the depreciation, you can claim for the revaluation, profit or loss also, and any income generated in that asset can be credited to the P&L account. For him, it is only user by paying the lease rent can be debited to the P&L account. In case of finance lease, that's a different. Though A may be the owner, beneficial owner being B. B is enjoying all the benefits. So we allow B can enjoy the depreciation. We'll see that later on along with the finance lease. In taxation, it's different. In A is number 19, it's different. We'll see that in the next class. Now I'm going to finish up what? Operating lease. Operating lease. Now, this illustration. Recognition of lease rent as expenses other than straight line method also possible. Usually straight line method. In case of operating lease method, we have the other methods also. The cost of the asset being 2 lakhs, rate of depreciation being 15%. Okay. Now, what is the overall lease rent? What is the overall lease rent? 1 lakh 20,000. For the output of 1 lakh 80,000. Then how much is the lease rent per output? Lease rent per unit 1 rupee 50 paise. This is the amount demanded by the lessor, but eligible lease rent is only this much, 10,000 into 1.5, 15. Here 1 lakh 80,000. No. Lease rent being 1 lakh 20, for output being 180. No, I just make a correction. This is unit, this is amount. Change this. Okay. So 1,80,000 being 1,20,000 being the units and 1,80,000 being amount. So then lease rent per unit being 1 rupee 50 paise. And what about the actual applicable lease rent? For 25,000 units, there's an error in the text. I will improve and guide you in the next class. Okay, we'll go for the operating list completely. Other than this one, I'll finish up in the next class. I'll directly go for this illustration. Question number 2 and sale and lease back. Question number 2 related to the operating list. In operating list, I left one illustration to be discussed in the next class. Classify the following into the either operating or finance lease. Financial lease means it should have the non-cancelable contract. Briefly give your reasons. Lease has the option to purchase the asset at lower than fair value at the end of the lease term. Then what could be this one? Where it happens? Finance lease. 8 marks question in CMA. 2 marks over. Economy life of the asset being 7 years, the lease term being 6 years. Major, but asset is not acquired at the end of the lease term. Not necessarily to acquire. But the main lease period is almost closer to the life period. Financial lease. Economic life of the asset being 6 years. Lease term is 2 years. But the asset is of special nature and has been procured only for the use of the lessee. Lessee's purpose only the asset purchased. Finance lease. Present value of the minimum lease payment X, fair value of the asset being Y. Okay. In this case. Finance lease. Okay. Finance lease. Because I will guide you this along with the illustration in the next class. Because finance lease we have to discuss. Finance lease, since the beginning of the lease term, present value of the minimum lease rental covers substantially the initial fair value. Means the minimum lease payment is almost equal to the fair value. Okay, means majority amount is already covered. So if the asset is purchased for 10 lakhs, the lease amount recoverable is around 7 lakhs, 8 lakhs, means it's finance lease only. That's how it is decided. Anyhow, what is called minimum lease rental and all we'll discuss along with the finance lease concept. Especially this question very often you can expect in your examination, sale and lease back. Sale and lease back. This question was asked very often. In case of finance lease, in case of operating lease, how can we treat? I will finish up these two here itself. In case of finance lease, any profit or loss on sale is deferred and amortized over the lease term. This is what about the sale and lease back related to the finance lease. Let's see. In case of finance lease, okay, A being usually lender, B being the borrower. What I explained? As B is in need to purchase a plant and machinery, requests A to purchase a plant and machinery for me and give it to me. I will pay lease rental like, which is equal to EMI like. That's the logic. But we already purchased the plant and machinery for rupees 10 lakhs. He has around 10 lakhs rupees in his hand. He purchased the plant and machinery. He has no money for operation. Now he demands, A, sir, give me 10 lakhs. What security you have to get the 10 lakhs? Sir, I have the plant and machinery. Plant and machinery, that's you are going to use, you can misuse, and who knows, you may sell. Sir, you can buy that plant and machinery. Now B sells the plant and machinery to A. For how much? A is in need of only 4 lakhs for operation. So he sells the plant and machinery for 4 lakhs. And now again B gets the same under lease. Now pays the lease rent. Pays the lease rent. What could be the lease rent? Come on. What could be the lease rent? The lease rent is recoverable based on 10 lakhs or 4 lakhs. Isn't it? It's a loan like no. So lease rent is fixed based on 4 lakhs only. Probably for every 1 lakh, lease rent being 10,000 per month. Now it is 4 lakhs means lease rent being only 40,000. If the sale value is 5 lakhs, then lease rent being 50. The sale value being 10 lakhs, the lease rent being 10 lakh, 1 lakh. If the sale value being 15 lakhs, is it possible? Yes, possible. Sir, value of the plant and machinery is only 10 lakhs, sir. Take it for 15 lakhs, sir. And pay installment 1.5 lakhs. So, he sells lower or higher than the actual fair value with that intention to get it back. While getting it back, the lease rent will be adjusted accordingly based on the real sale value. In this case, you lost 6 lakhs, you know what you can do. Can be debited to the P&L account? No, sir, it cannot be debited. Because it's only borrowing, while debiting this 40,000 rupees in your P&L account, this loss, you know, if the term being 10 years, this loss also every year 10,000 is debited to the P&L account, not complete 6 lakhs here. Means defer the profit or loss. Because anyhow that profit or loss on sale of the asset to the lender and getting it back by you, that profit or loss will be anyhow indirectly adjusted in the lease rent fixation, so that profit or loss cannot be directly transferred to the P&L account. That can be amortized over the tenure. Any profit or loss on sale of asset is deferred and amortized over the lease term in proportion to the depreciation on the leased asset. Okay, how do you depreciate this 10 lakhs? The same way this profit and loss also be depreciated over the tenure in case of finance lease. In case of finance lease. So from this it is very clear, if you are selling the asset to the lender and again getting it from the same lessor, the intention is what? It's only borrowing. So while selling, you know 10 lakhs worth the asset, giving it for 4 lakhs, you are sure that any of the asset is going to be used by me only. Based on the amount I sold, the lease rent is also fixed. If I sell it for 8 lakhs, the lease rent being 80,000 rupees. If it is sold for 4 lakhs, lease rent being 40,000 rupees. So, any of the lease rent will have the impact with respect to the profit and loss. Higher the profit, more will be the rent. Higher the loss, lesser will be the rent. 10 lakhs sold for 4 lakhs means loss is 6 lakhs, rent is lower. Instead of that, if you sell it for 15 lakhs, there is a profit 5 lakhs. Then seller will demand, that lender demands, sir, 15 lakhs I have given, you are giving me 1 lakh 50. So that 1 lakh 50, the lease rent is not the assets value actually purchased by the A. It's what about based on the loan amount given, like that sale value is considered as a loan amount. Okay. Shall I go for the lease back? Sale and lease back in case of operating lease? This one is pretty rare, but this one is very often asked in the examination. What's that? This next one. Operating lease. Operating lease. Sale and lease back. Here I have to consider 3 values. 3 values. What are the value? Okay. 3 values. I am going to consider 3 values. operating lease, sale and lease back. Lease back. You have to consider actual sale price, fair value of the asset you sold, and carrying value, the value at which it is appearing in the books. Now tell me, in your book, the value being 10, sale value being, the fair value being 12, tell me at what value you want to sell. What value you want to sell? The value appearing in the books of the asset being 10 lakhs. But if you want to sell in the market, you can sell at 12 rupees. Then what is your intention? At what rate you want to sell? 12. Normal market rate is 12. So you have to pay me 12. So you can decide the sale value could be 12 only, where sale price is equal to fair value. Now the next question. Will you sell for 11? Will you sell for 11? See, two buyers are there. Buyer A is willing to pay 12 rupees. But buyer B says, I will give only 11 rupees. Now, to whom will you sell? But if you sell B says, sir, if you sell to me 11 rupees, whenever you are in need for temporary use, I will give and rental at discounted price. Now tell me, to whom do you like to sell? So, there is a chances where the sale price is less than fair value also, with some idea that you enjoy some benefits later on with him. Okay. This scenario also you get the profit, this scenario also you get the profit. Because profit and loss is what? Sale price minus carrying amount will be the profit. You show 10 rupees in your books, sold for 12 rupees means 2 rupees profit. You show at 10, sale value is 11 means still there is a profit 1 rupee. Though there is a profit, but still you can sell it for 12 means the profit could be 2. Another case. You sell for 8 rupees. Will it be possible? Less than the carrying amount. Possible. As I already told you, that's a hidden agenda. If I sell to him, whenever I need, I can take it. Is that okay? So my friend always wants to sell the property to me. Any emergency, he comes and says, hey, you just keep it. I could still remember, compel me to take one audio system. 20, say, I don't want this, already I have the audio system. No, take. It's 20,000 rupees now, offer price, only 10,000. Okay, I purchase. The next month, you have the audio system, no? Keeping it idle, no? I will take it for 1 month. This fellow has taken, 3 months later, he has not returned. So, such a hidden agenda is there. So, how can we handle in this case? Let's see. If the sale price is equivalent to fair value scenario, sale price is equivalent to fair value scenario. This is genuine. Genuine, no problem. In that case, whatever the profit and loss, it can be recognized immediately. Let's see. I will give the example. Sale price being fair value and carrying amount. I assume that the carrying value being 10 always, carrying value being always 10. I keep this static. Fair value being 9 scenario and sale value also 9. These two are equal situation. Here 11 and 11. What about the profit and loss, sir? Profit and loss is only while comparing the carrying amount and sale price. What is the profit and loss here? You lose 1 rupee, you gain 1 rupee. Okay, no problem. In case of loss, debit to P&L, in case of gain, credit to P&L account. That's a normal scenario. Now, if the sale price is less than fair value, so I assume that fair value in all the scenario being equal. Three scenario I am going to discuss. 10, 10, 10. Okay. But the fair value being 12. But sale value is less than fair value. Maybe you sold for 11, you sold for 9, you sold for 9. Clear? What about the result? What about the profit and loss? Profit and loss is based on what? Sale price and carrying amount. 1 rupee profit, 1 rupee loss. Here also 1 rupee loss. Is that clear? Clear? Now tell me, I am going to guide you this one. What's that? Transfer to P&L account or not. In the first case, I can transfer that to the P&L account. In this case, there is gain. In case of gain, you transfer to P&L account. In case of loss, can I transfer to the P&L account? Yes. No. What about the no? There's a hidden agenda. Though the fair value is 12, I sell it for 9. Why? If I sell to this party at any time, if I need, I can get it from him at much discounted lease rate. With that hidden agenda, I sold for a loss means this loss is not a matter. Anyhow, I can recover later. Means recoverability is there. Recoverability is there. Okay. Recoverable. Recoverable. Here, no sir. In case of emergency, sold immediately. That though it may be saleable at 12 rupees, that buyer demands to wait for 3 months. But I mean emergency, I sold for 9 rupees. So no hidden agenda, non-recoverable. Because of emergency, I pushed to sell lesser, can be debited. No sir, I have a benefit in this later. Because of that one, means recoverable this loss later on means this 1 lakh will be deferred to be adjusted later on. Deferred later. Second scenario. The last scenario, if the sale price is more than fair value scenario, we assume the carrying amount being 10 always. Carrying amount being 10 always. Carrying amount being 10 always. Fair value being 10, 11, 8 we assumed. Sale value is always more than the fair value. So 10 means 11, here 12, here 9, this way. Now what about the profit and loss? First case, profit and loss is the difference between these two. 1 rupee profit, 2 rupees profit, 1 rupee loss. 1 rupee loss. Now how much you will be transferring to the P&L account? Okay. Transferable to the P&L account will always be, always be fair value minus carrying amount. Okay. See, you are eligible to sell at what rate? Only fair value. If you are capable of selling beyond fair value, there is definitely hidden agenda. Any amount recognized beyond fair value will be deferred. That's the logic in the last case. See, 10 fair value 10, no profit, no loss. 10 sold for 11, 1 rupee is the profit. 10 you sold for 8, 2 rupees is the loss. Sale value beyond fair value is always will have hidden agenda, something hidden there. That will be deferred. So here 10, 11, 1 rupee will be deferred, 1 rupee deferred, 1 rupee deferred. Clear? These are the three scenarios. This question very often asked. Okay. If it is okay, I will solve one illustration asked in the previous year exams. Question number 3. Once that question is over, we'll wind up today's lecture. That finance lease illustration as well as operating lease, one additional illustration I have to improve and tell you. We'll solve that illustration in the next class. Okay. So once it is clear, text me. So that are 3. It's different, always deferred, always deferred. Operating lease only, these points you have to keep in your mind. H Limited sold machinery having WDV of 400 lakhs. WDV means carrying amount. To B Limited for 500 lakhs. This is sale value. And the same machinery was leased back by B Limited to H Limited. The lease back is operating lease. Comment. Sale price is equal to the fair value. Okay. First scenario, sale value is equal to fair value. What are they? We have sale price, fair value, carrying amount. Sale value 500 and fair value also 500. Carrying amount being 400. As sale value is equal to fair value, genuine. What the profit and loss you get? 400, 500, 100 rupees is the profit and loss. In the case of genuine, transfer to P&L account fully. Transfer to P&L account. How much? The entire profit can be transferred to the P&L account. Scenario A. In case of scenario B, fair value being 600. Fair value 600. Carrying amount 400 and sale price is 500. Sale price is less than fair value. And what about your profit and loss? You had a profit 100 rupees. Can be transferable to the P&L account. In case if you have the loss, is there any hidden adjustment? Then deferred, else not deferred. Scenario C. Scenario C. Fair value 450. Sale price 380. Carrying value 400. Now the sale price is less than fair value, similar to the earlier one. Profit and loss being the difference between sale price and carrying amount 20. Loss now can be debited to the P&L account or deferred. Or deferred. Is that clear? This is a choice. In the text it is stated this way. Loss of 20 lakhs to be immediately recognized provided the loss is not compensated. If it is compensated because of some other period's lease, then it will be deferred. It will be deferred. Next scenario D. Fair value 400. Sale price 500. Carrying amount 400. Now there is a profit. What about the scenario? Sale price is more than fair value. Then what about the profit? Profit is nothing but the difference between carrying amount and sale price, 100 rupees. But how much you can recognize in this case? In your P&L account, fair value minus carrying amount will be your profit. Defer being what? Sale price minus fair value. It should be deferred always in this scenario. When the sale price is more than fair value, which is logically not possible. So in this case, you always defer. And profit credited to the P&L account being 0. 500 minus 400, 100 rupees can be deferred. 100 rupees can be deferred. Deferred means over the life it can be amortized. Scenario E. The fair value 460. Sale price 500. Carrying amount 400. As sale price is more than fair value, you follow the same procedure. The profit being the difference between 500 and 400, 100. how much you can recognize, the amount recognized in P&L account being the difference between fair value and carrying amount 60, and the difference between 500 and 460 can be deferred. Clear? The last one, option F. Fair value 350, sale price 390, carrying amount 400. This one also similar to the same, because sale price is more than fair value scenario. Your profit and loss being, this will be the profit and loss actually, 10 rupees loss. Though 10 rupees loss, how much you can recognize now? The difference between fair value and carrying value, 50 rupees loss is recognized, but the sale value is beyond 350, gain is amortized over the tenure.